I'll talk about Kevin Warsh, the nominee for the chairmanship of the Federal Reserve. And the orthodoxy is that he is the hawk. Trump had 4 candidates to choose from. They were all on his side, all politically on the right. They all promised lower interest rates, including Kevin Warsh. But of the 4, the financial markets thought of Warsh as the hawk, which seemed contradictory, but his record is, in the past, he was a Federal Reserve governor 15 years ago. When he criticized interest rate cuts, when he criticized QE, and we're going to talk about QE at greater length later, it was Warsh's record that he was anti-QE, anti-lower interest rates. He was the hawk. And the financial markets interpreted Trump's decision to hire the hawk amongst the 4 candidates as a sign that Trump is kind of pulling back from his attempt to take control of the Federal Reserve and to remove its independence. I think it's actually the opposite way. The way to think about this is to put yourself into the head of Donald Trump. Now, this is not, I would acknowledge, not a place where most of our viewers and listeners want to be, but it is actually instructive to go through Trump's experience with central bank governors, because, he is in his 2nd term. He has appointed several central bank governors, including Jerome Powell, the current chairman. And people told him things during these, interviews that they later would not honor. And they always tell him, if you appoint me, I'll cut the interest rates. I'll do whatever you want. And then when they are back at the Fed, then they do whatever they want. It's this is life. The Fed is an independent institution. Why should they listen to him? The way Trump thinks about it these days is no longer in terms of what people are promising. He said at one point, people are promising the earth. And, how do I know whether they mean it? But Kevin Warsh is an interesting candidate from Trump's perception. He is married to a member of the Lauder family, Estee Lauder, the cosmetics empire. The empire is one of Trump's biggest supporters. The chief of the family has put the idea into Trump's head to acquire Greenland. Trump is a business-oriented leader. This is something we know. I don't care about what Trump says. I care about what he does. And in his foreign policy, in his domestic policies, he is business-oriented. He looks at a war. Maybe he wants to get the Nobel Peace Prize, but we know he wants to do business. This is all about business transactions. His relationship with Israel, his relationship with the Russians, it's about business. What would you say? What would I say if I said, how do I get control of the Fed? How do I get control of the Fed? Hire the guy who tells me what I want to hear? Probably not. I would hire the guy with whom I have business relationships, indirectly. I'm not insinuating that Warsh is not his own man. He may well surprise us on the upside. But I'm absolutely sure that in Trump's thinking is that this is a person, the kind of person you'd have, whose family you have for dinner, or people with whom you are in regular contact. So he was not hired because he was a hawk. Trump doesn't care about monetary policy. He wants low interest rates, for sure, because it helps him. But, he has no way of ascertaining, and he's smart enough to know that. He has no way of ascertaining which of the 4 candidates would deliver his policies. But more likely, he is able to do this with somebody who is rich. Kevin Warsh is a rich man, who is part of the circle in which Trump moves in. You are much closer to these people. You're much closer to the likes of Kevin Warsh than to the clients of Christopher Waller, who is a highly qualified economist, macroeconomist, also Trump appointee. He is on the right, no question about that. But Chris is a macroeconomist, and usually he follows his models. He doesn't follow the advice from the White House. He's a straight shooter. He is not somebody who would be prone to pressure. And this is the difference here is, Kevin Warsh was a hawk, but in the last year, he was a dove. He called for lower interest rates. He campaigned for the job, very visibly campaigned for the job. What we saw is not a man of great principle. He was a hawk during Democrat administration. He's a dove during Republican administrations. You could say this is not very hawkish. This is not very principled. This is very much the kind of, the business relationship. This sounds like a business proposal more than a classical central bank activity. So I think the markets got this wrong. One of the reactions we saw in the markets, strengthening of the dollar, but a crash in the gold price. And we should remember the gold trade, the reason why gold and silver and other metals shot up from, a previous like $4,000 to $5,500 an ounce was a debasement trade. People feared Trump would make the Fed reduce the Fed's independence. He would debase the dollar through stable coins. I mean, we had these discussions before, and we're going to have many of those in the future. I always said there's a rational reason to bet against fiat currency because of the way governments are acting. And that's what investors did. And now they changed their mind because they thought, or they think, Trump appointed a hawk. Now, we have to give anyone the benefit of the doubt, but, we can only judge from what we know. And, as an investor, you make a bet on the future. I can only say that I would not have made that bet that this is a time to sell gold or to reduce the price of gold by 1/3. This was a genuine market crash that we experienced. This is a crash. 30% is a crash. He was the front runner anyway, or one of the two front runners in the end. And he was the front runner for most of the period. Just because of this appointment, it just makes no sense to me. And I think it is a bad call.
Going back to 2008, I recall, I think everybody recalls, the Federal Reserve, for all its faults, under Bernanke and other chairmen, at least it was far more competent than the European Central Bank. In the European Central Bank, you had Jean-Claude Trichet, who, while the financial world was collapsing, was increasing interest rates. Probably the worst central banker in the history of central banking. Now, if Kevin Warsh was the chairman of the Fed at the time, the Federal Reserve would probably have been just as bad as the ECB, because it then, as you mentioned, Wolfgang, that he was recommending in the middle of the collapse of the collapsing Wall Street, he was recommending that interest rates should go up, and he was worried about inflation instead of being worried about deflation, like any sane person would have been worried at that time. So his track record is pretty dismal. So he's incompetent, clearly, or at least he called that wrong. But now what you are telling us, Wolfgang, is that he is also corrupt. I mean, you didn't put it in those very fine terms, but this is effectively what you mean, right? I mean, he's married into a family that does business with Donald Trump. When you said that he campaigned for the position, and I agree entirely with you, well, essentially what you're saying is that he told the master what he thought that the master wanted to hear, which is true. And he got a job as a result. And he's most likely to just go along with whatever the Donald wants. Now, I wouldn't say that the markets got it wrong, because we must never forget that the markets are not moved by a common belief. They are moved by a common belief about a common belief. So even if everybody, all the market players, knew exactly what you were saying and what I'm saying, as long as they thought that somebody else thought that this man was going to be a hawk, then that was, rational enough for them to dump gold and silver.
No, absolutely. No, I wasn't saying the markets are wrong. What I'm saying, I've covered, when I covered the Eurozone crisis, one of the things I learned is the markets were wrong at pretty much every moment, but they were kind of right on average, kind of right over long periods of time. But what markets tend to do, they react to announcements, and then they follow each other and they exaggerate announcements. For example, I remember the reaction they had after Mario Draghi's famous bailout of the Eurozone, an extraordinary rally in the bond market, and not seeing what this policy would ultimately do. It would ultimately lead to higher inflation over a longer period of time. Now, the markets will eventually, if whatever Warsh will be and do, if he gets the confirmation, they will adjust to this, and then they will reprice it again. I'm merely saying the reason when I say the markets are wrong is based on the information they have. As I said, all the candidates told Trump what he wanted to hear. That they all do. This is basically, you're running for a job to become you're not going to say, I'm going to raise rates, Mr. President, and I'm going to be independent. Especially now that the Supreme Court is about to pass a ruling on Trump's dismissal of Lisa Cook, one of the central bank governors, and probably in favor of Cook. It will be a ruling against Trump. From what we hear, there was a hearing, and the conservative justices expressed doubt about Trump's decision to fire her. So it could well be that Trump's ability to influence the independence of the central bank might be much more limited than Trump himself thought. So that's why I think the best way for him to influence the court is through family connections, or the kind of the classic ties that people build in amongst your supporters, rather than through the formal ways of, I'm the president, I'm going to tell you what to do. That would be, a counterproductive way of dealing with this. I think the markets will probably bounce back. I think, I think the reason for what I call it the debasement trade. The concerns about the stability of the dollar, the stability of the US debt has not changed. The US debt is exploding thanks to the fiscal policies of the administration. We talked about the role of stable coins in the past. We should expect an increase in dollar-denominated debt. We should expect the Fed to accommodate this. And in fact, there is a thing called fiscal dominance. Fiscal dominance is a state where the central bank can't really, even where a hawkish central banker can't counteract the trend because there's so much debt. The only way for the central bank to stem against the tide of debt would be to cause a sovereign debt crisis. Now, no central bank governor would dare cause a sovereign debt crisis of his own country. So this is a situation where a central bank is constrained in its ability to act. And I think we are basically heading into a situation of fiscal dominance in the United States, where the central bank will, by force of the situation, have to accommodate the administration's wishes. Trump can pretend he respects the independence of the central bank. It does not matter.
Well, you mentioned Mario Draghi, so allow me to embed my own orthodoxy in yours and debunk it. The orthodoxy about Mario Draghi, a man who is far more competent than most central bankers around for a while now, and somebody I know personally. Well, the orthodoxy is that Mario Draghi, unlike Warsh, unlike Trichet, who I mentioned before, is a wise man, a pair of safe hands. He has been making all these important speeches. He issued the Draghi report that you have commented. And a lot of that work of his and a lot of these speeches contain very interesting points and some points that you and I have been advocating for a while now. And yet, I want to debunk the orthodoxy that he was a good central banker. Let me make this point because this comes from the heart. The other day, he gave a speech. Somewhere in Belgium, he received an honorary doctorate. And he gave a speech in which he said some of the things we've been saying, except a bit more mildly. He said, if I recall correctly, he said that Europe is running the risk of becoming subordinated, divided, deindustrialized. Well, it's not running the risk. This is exactly what is happening. And then he offered a diagnosis of why. And he said the problem began when China entered the World Trade Organization. And then he juxtaposed this problem with something that Europe has done well, and that was the euro. And I think he's wrong on both counts. This saddens me because, as I said, I have seen him in action. He was the only smart man in the room, really, the only seriously smart man in the room. But, Wolfgang, for the benefit of our audience, let me explain why I think that he was instrumental in fragmenting and damaging Europe irreparably. So when you have a smart man like that, if I'm right, being one of the main reasons why Europe is fragmenting and deindustrializing, I lose the will to live. But let me justify why I'm saying that he was instrumental in damaging Europe substantially. Okay. Let me take you to the time when I entered the finance ministry in 2015. There was already a bank run happening. He was the central banker of Europe. He was feeding the bankrupt with rumors that our government would be throttled and our banks would be closed down. I go to London, speak to financiers. Greek bank shares go up by 22% overnight, and the Athens Stock Exchange rises by 11-12% overnight. The next day, he pulls the plug of the Greek banks. Effectively, he shuts off ECB liquidity to the Greek banking system and starts the process of essentially the disaster that followed. Now, a few months later, I had to repay him as a finance minister of Greece, 5.5 billion. Which, of course, I didn't have because I entered the ministry and the treasury with absolutely nothing in the bank. Right? And at some point, when we first met and we were discussing these things, I said to him, so how do you expect me to give you 5.5 billion when you're pulling the plug from my banks and causing a bank run and effectively precipitating this collapse of our finances? And, just listen to the answer. The answer is that came from his central bank and from him is as follows. Audience, are you listening to this? This is the recommendation of one of the smartest central bankers in the history of central banking, unlike Trichet, whom I lambasted before. So here is the answer. The answer is, get your bankrupt banks, because all our private banks were bankrupt at the time, if you could recall, in early 2015, to issue IOUs, which of course would be worthless, right? And get those IOUs as a Minister of Finance, guarantee them. In other words, have the IOUs of bankrupt banks being guaranteed by a bankrupt finance minister. Okay? And then give them back to them and ask them to bring them to me, to Frankfurt, so that they post this as collateral and borrow from me. Simultaneously, issue new treasuries of the bankrupt Greek state and sell them to the Greek bankers, and they take that 5 billion and they pay me. Now, that is how one of the smartest central bankers in the game solved that problem. The reason why I'm mentioning it is so that our audience knows that maybe it's not a question so much of competence. Maybe it's not a question even of humility. It's not even a question of, lack of corruption and probity. The way our central banks have been weighed down by responsibilities that they shouldn't have. Because, why did Draghi do what he did? Was because the politicians in the Eurozone didn't want to take on their shoulders the burden, the task of consolidating the European Union. Similarly, the Fed, after 2008, after the collapse of Lehman Brothers and Wall Street, they were weighed down with tasks that should be the Treasury's tasks.
No, I completely agree. And I think Draghi would probably agree with the last statement that he had to do things that politicians should have done, like saving the euro. This is not a job that should have fallen to the central bank. The EU was not willing to set up the institutions to allow the euro to happen. And I think you see this, coming also back to our transatlantic discussion. Central bankers, we can call them smart, and we had some smart. And I certainly agree that Draghi was certainly the smartest central banker I have met. What I do, however, think is that on average, they are less impressive today than they were. And I think it matters less going forward than it did in the past, because the central bankers were the heroes. Economists were the heroes. I mean, I always give this example of the television series The West Wing. And the authors of The West Wing portrayed the American president as a Nobel Prize winning economist. Now, no one in their right mind would do this today. If they had to cast the president, it would be much more like a Trump character or somebody, but certainly not an academic. And the same goes for central bankers. I mean, look at the age of the macroeconomist as a central banker. Ben Bernanke, Janet Yellen. These were the academic economists who, at one point, became central bankers. There hasn't been any. The Kevin Warsh is a lawyer, Jerome Powell is a lawyer, Christine Lagarde is a lawyer. They're all lawyers, and it's back to where it was before, or bankers, people with financial experience, legal experience, or other experience. In fact, I don't think you need to be a macroeconomist to be a central banker. In fact, it's very much the exception, and we also cannot say that the central banks will run better because macroeconomists were in charge. The quality has, on the whole, declined, but I think the great age of central banking is behind us. This was a period, where the central bankers were like the masters of the universe characters. I mean, we're having a podcast about a central banker. I think maybe in 5 years' time we wouldn't be having a podcast about a central banker. This would be a minor appointment. I think we're heading very much in that direction. But central banking is an important issue. It certainly got us to where we are. Your story alone tells us, how it touched the fate of countries, what happened in the last decade, and to a very, very serious extent.